Welcome to this segment of our series discussing the financial components of Idaho State University. In our first segment, we looked at the various types of revenues we receive. In this segment, Expense Overview, we will be exploring the various categories of expenses. There are two common methodologies used to classify and present expenses. When reviewing ISU's audited financial statements, we would note expenses classified by activity. Major activities include personnel expenses, such as wages, salaries, and benefits, services, such as outside contractors and software licenses, supplies, insurance, utilities, scholarships, depreciation, and other expenses. These expenditures are grouped by activity, are also known as expenditures by natural classification or object. The other methodology, known as the Nakubo classification, presents expenditures by function. The functions include categories such as instruction, student support, institutional support, and others. Looking at Idaho State University's expenditures, we can see that ISU had total expenditures of $225.3 million in fiscal year 2012, which subsequently increased to $253.9 million in fiscal year 2019. This is an increase of $28.6 million, or 13% over the past 7 years. As discussed in the revenue segment of our series, the overall enrollment has declined significantly during this same time period. Let's look at the various components of our total expenditures by activity or natural classification on the next slide. Later, we will look at expenditures by functional area. Of our $253.9 million of expense in 2019, personnel costs account for $171 million, or 67% of our expenditures. Services account for $26 million, or 10% of expenditures. The remaining 23% of expenditures is comprised of supplies of 6%, scholarships and fellowships of 6%, depreciation totaling 5%, insurance, utilities, and rent of 3%, and other operating and non-operating expenses equaling 3%. Now, let's look at some of the activities that are driving our $29 million increase in total expenditures since 2012. The chart in the upper left corner depicts personnel expenses, and we can see that personnel expenses have increased by $35 million, or 26%, between 2012 and 2019. I will dig into this a bit further in just a moment. Supplies expenditure increases peaked at $18.9 million in 2016 and have fallen to $15.9 million in 2019, an overall increase of 12%, or $1.7 million from 2012 to 2019. Scholarships and fellowships in the bottom left corner have decreased by 33%, or $6.9 million from 2012 to 2019. And finally, in the bottom right-hand corner, we can see other operating expenses, which have increased by 16%. Although a significant percentage increase over time, the category makes up only 2% of our total budget and accounts for just $800,000 of our $29 million increase over the past 7 years. The remaining categories not depicted on this slide are relatively flat or declining a modest $2 million during the 7-year period. The clear driver of our increase in expenditures is personnel-related expenses. Now let's look into personnel expenditures a bit further. As noted on the prior slide, personnel expenses have increased from $135.9 million to $171.2 million in 2019, an increase of $35 million, or 26%, since 2012. What caused this increase? Well, during the past 7 years, we experienced increases in the fringe benefit rate, the cost of insurance, and the CEC, or change in employee compensation. If we applied all of these adjustments to our 2012 workforce, the increase in personnel costs would have topped out at $161.2 million, explaining $25 million of the $35 million increase. The remaining $10 million of increase is due to non-inflationary changes in compensation and staffing levels. The following chart depicts our change in employee headcount. Our headcount, including all employee groups, was 3,899 in FY12 and 3,937 in 2019, a 1% increase over that 7-year time span. We are currently working with institutional research to compile staffing FTE data to add more depth to the changes in headcount or employee count. Let's unpack this headcount number a little bit further. These charts depict some of our employee group trends. In the upper left corner, full-time faculty has increased by 3.2% or 18 individuals since 2012. Following a decrease in 2013 and 2014, full-time faculty members have steadily increased by approximately 50 members since the low in 2014. Moving to the right, we can see full-time non-classified staff increases of 18% to a peak of 518 employees in 2016. Since 2016, the non-classified staff has decreased by 32 employees. Thus, the overall increase in non-classified staff between 2012 and 2019 is 47 staff members, or 10.7%. While full-time faculty and non-classified staffing levels increased during the past 7 years, classified staff and part-time employee headcount, depicted in the lower two charts, has decreased. Full-time classified staff is down by 2.4% or 13 individuals since 2012, and down by 34 individuals from the peak of 571 staff members in 2014. Part-time staff is down 24.5% or 89 individuals since 2012. Returning to our trend line depicting the increase in personnel expenses, we can summarize the $35 million increase from 2012 to 2019 as follows. $25 million is due to the increase in inflationary adjustment through increases in CEC and benefits. Factors contributing to the other $10 million of increase include a change in mix from part-time to full-time faculty and staff, increasing the numbers of full-time faculty and non-classified staff, and market rate salary adjustments. This line represents the trend in our actual scholarships and fellowships expense. This doesn't tell the whole story, however. Although the amount of scholarship and fellowships treated as expense has declined $6.9 million or 33% since FY12, this apparent decrease does not take into account discounts, waivers, and allowances. If we combine scholarship and fellowship expenditures with discounts, waivers, and allowances, we arrive at our total discount. We see a downward trend from 2012 to 2016, beginning with a total discount of $43.3 million in 2012, followed by an upward trend in 2016 with a combined total of $44.5 million. These two trend lines tell a contradictory story of how we spend our financial aid dollars. The first line indicating a 33% decrease in expenditures, while the second line indicates a 2.8% increase. Why conflicting narratives? Both trend lines were constructed from financial aid components in our financial statements. The total scholarships, waivers, and discounts include funding from outside sources. Idaho State University receives dollars from the federal government in the form of Pell Grants, the state government in the form of the Idaho Opportunity Grant, and scholarship gift revenue from outside the university. This revenue is passed through our financial statements to the students, and we exercise no control over these expenditures. If we remove the pass-through dollars from our total spend on financial aid, we see the trend captured by the orange line. This represents the discretionary expenditures for scholarships, fellowships, discounts, and waivers. This controllable expense or strategic investment in student recruitment and retention has risen by 55% or $8.5 million since 2012. The Finance and Business Affairs Office is currently working with the Student Affairs Office to understand the factors contributing to this trend as it outpaces the percentage increase in tuition and fee rates and the total increase in tuition revenue over the past 7 years. Classification of expenses by function or the NACUBO categories allows us to view our expenses through a different lens. In the previous slides, we saw that personnel expenses accounted for 2/3 of our university expenditures. When looking at our expenditures by function, the largest component is instruction at $105 million, representing 41% of the expenditures. Institutional support and auxiliaries each represent 10%. Followed by maintenance and operations and academic support at 7%. Research expenditures, scholarships and fellowships, and depreciation at 5% each, and the remaining 8% is made up of expenditures for student services, public services, and the libraries. In the next 2 slides, we will examine several key expenditure trends by function. As we disaggregate our expense trends by function, we see that we have been steadily increasing our investments in instruction and student support activities between 2012 and 2019. Instruction has increased by $19.5 million or 23% over that time period. Academic support has increased by $5.5 million or 44% over the same 7 years. Student services has increased by $3 million or 39% since 2012, and library expenditures have increased by 60% or $1.4 million. This slide illustrates a positive trend in our increased investment in direct student support. Over the past 7 years, our investment in instruction and direct student support comprised of academic support, student services, and library expenditures has increased by $29 million or 27%, while all other expense functions are slightly lower than 2012 levels or $815,000, is characterized by just a 1% decrease during that time period. Shifting to research expenditures, we see a troubling downward trend. Expenditures are down by $4.4 million or 23% from 2012. Revenues have decreased by $8.5 million over the same time period. The area between the 2 lines approximates the indirects or F&A return to the institution on research expenditures. And you can see that that line has narrowed, or gap has narrowed, over the 7 years. This trend follows a decline in proposals and awards, which we looked at in the last segment, the revenues. In summary, Idaho State University has total annual expenses of approximately $254 million per year. In looking at the past 7 years, personnel expenses have been steadily increasing, outpacing inflationary adjustments. Our workforce has shifted toward more full-time employees. We have fewer part-time employees on the payroll now. We have increased our investments in instruction and direct support. Research expenditures have continued to decline, and we have increased our discretionary spending on financial aid by 55%. These are preliminary, high-level takeaways from the macro data. And now we need additional data and analysis to better understand our expense and staffing trends at the unit level. Thank you for taking time out of your schedule to watch this presentation. As always, I will greatly appreciate your questions, comments, and observations, and you can send them to me at finance@isu.edu.